Hey everyone, welcome back to Upside Down Data. Today I want to talk about some of our indicators and what they're making of Bitcoin's current price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So Bitcoin has been kind of hanging out in a range and has been if you've been following the market over the last couple of days, been acting very interestingly, right? Pumping, dumping, pumping again. And today, it looked like the bears were going to dump it all the way back down to erase yesterday's gains, but then the bulls stepped back in and is shooting back up. But with a lot of that kind of short-term price action, it's not really all that meaningful on its own oftentimes. It doesn't really give us too much of an idea of where the market's going. And so it's useful to look at kind of longer-term trends or indicators that give us an idea about what movements actually might matter and what movements might just be noise. So I want to start with the trend confidence indicator for Bitcoin. This is an indicator we look at a lot on this channel, and it's designed to really tell us the confidence that we can have in a given trend. So if we're in an uptrend, can we be relatively confident of that uptrend continuing? Or if we're in a downtrend, can we be confident in that downtrend continuing? So what I'm showing you here is the TCI for the entire price history of Bitcoin. If you're not familiar with this indicator, 0 is kind of this dividing line between bearishness and bullishness. Being above 0 is bullish, being below 0 is bearish. And the idea is that if you're in an uptrend and the TCI is green, that's bullish. It means you can be relatively confident in that uptrend continuing. But if you're in an uptrend and the TCI flips red, that's bad news. That means the uptrend's likely over and downside movement is likely to come. So when we're zoomed this far out, it's a little bit hard to see what's going on. So I'm just going to zoom in to the past year or so, or specifically starting just in January of 21, just so we can see what the indicator is doing more recently a little bit easier. So this yellow line is the price of Bitcoin, and I just have that overlaid over the TCI level. And, if you've seen me talk about this indicator before, you kind of know what it does. It tends to be a leading indicator. It tends to front run movements to the upside and downside. So you see this back in the spring of 21, flipping red well before we got the massive crash, but really giving us an early warning that a big move to the downside was likely to follow. And then again, the summer of 21 did the exact same thing. It flipped green before the move back to the upside. Again, being this early warning that a move back up could be likely. And we even saw some movement back here where it flipped green before this big move to the upside here. Really from kind of the low to mid 30Ks up to 48K, it was green, and then flipped red in at around 44, 43K area, preceding this big capitulation to the downside we just had. But if you're looking at where we are right now, one of the things that's really interesting about this indicator is we just closed green yesterday. We just flipped into the green zone. And with price having rebounded from the early dumping that was happening earlier today, we're still sitting up in the green zone. Not comfortably yet, but at least up above it. Now, again, before we get too excited about this, it's important to kind of close a little bit above this probably to be more confident that this is actually going to lead to some follow through. But this is a great sign. This is the first time since, leading into this big capitulation that we've seen the TCI flip bullish on Bitcoin, thinking that this is now potentially looking more like an uptrend than a downtrend. And certainly in recent history, if we just look back across Bitcoin over here, more often than not, when you start closing in the green consistently, that's led to some upside. The one couple cases where that would be an exception would be right here. This move up here, it flipped green, then red again immediately. And so that's what we want to be watching, right? If we just immediately close in the red again tomorrow or the next day, then it could just be a fake out. It doesn't really mean much. But if we see something more like we saw back here, or even what we saw back in here, that could mean that at least some upside is likely to follow. Doesn't mean it has to be a lot, right? It doesn't mean it has to be this big rip to ultimately all-time highs or anything like that. But even if it's just a move like this that we saw before, I think most people would be, liking to see that happen. At least getting us a little bit further away from the lows that we put in back over here, with the wick all the way down to 25K. So we're going to have to wait and see, but certainly this is a good sign. And so if we're asking the question of what should we make of the recent price action, from TCI's perspective, actually, there might be reasons to be cautiously optimistic, although, of course, nothing is guaranteed. And the nice thing about this indicator, as I mentioned before, is we can actually probe it to ask it what specific price level it would like to see Bitcoin hold to remain bullish. And right now it's watching a little over 30K as being that dividing line. So I'd say roughly the 30K range or area is where this is looking at. So if you can stay above 30K, it's going to maintain its bullish footing. If you collapse back below that, it's going to flip bearish again. I should also note that, wicks are not all that important. I care more about if we start closing, especially consecutive days in the green. That's when I'm going to be kind of getting more excited. And so that's, again, if we were to wick below this but then pull back above it, I wouldn't see that as an invalidation necessarily. But again, this is not saying that we're guaranteed to rip to the upside. It's not guaranteeing we're going to have to even go on this run. But it's the first step, right? You need to start closing green on the TCI before you can get too confident in the uptrend continuing, at least in recent history. And so we've gotten kind of the first step here, and that's a point for the bulls. We'll have to wait and see if follow-through happens. But that's certainly a hopeful sign. It's the first time we've seen that in months. All right, let's look at a different indicator for Bitcoin that we like to talk about. This is the Momentum Bias Indicator, or MBI. This is a more macro-oriented indicator, at least the way that I like to look at it. So this is, even though it's coded, or the color scheme is similar to the TCI, it's getting at something very different. So this is a momentum indicator. It's basically just trying to get at the degree to which the momentum in the market is biased to the upside. So basically any moves back to the downside just get quickly rejected, and then the positive momentum just carries it forward. And then below zero would be negative momentum bias. And the way this is denominated is that this is the mean. So zero is the average amount of momentum in Bitcoin, which is of course positive over Bitcoin's life. And these are standard deviations. So one standard deviation above, one standard deviation below the mean. And so what's nice about the MBI is, first thing you'll notice that it does call tops of Bitcoin quite well. That's one thing that you'll notice. But the thing that I like to look at is it gives us a window into the point of the market cycle that Bitcoin is currently in at a given time. And the reason I say that is that it has different behavior. The MBI shows different behavior in different parts of the market cycle. I've talked about this before, where in bull markets, it spends a lot more time in the green than in the red in kind of these build-up phases to bull runs. It kind of does this equal oscillation around zero before ripping off to the upside. Then bear markets, it spends more time in the red than in the green, and it'll have these moments where it tries to peek its head up above zero, and then quickly gets rejected back to the downside. And I've talked before about how we got our first kind of rejection, our head slapped back down underneath zero, back over here in that move in March of this year, and we've been back down. But the MBI has been tracking a course back up ever since. And so what I would be looking for the MBI to start getting more optimistic in a more macro sense of us being able to kind of continue in a more bullish footing, like, building into a bull run, for example, would be that we'd have to reclaim zero and not just immediately get rejected like we did up here, but reclaim it and then start this oscillation around zero. If we can see that start to play out, that could mean that we're building into this kind of a phase. And it would most likely mean that price would start grinding up as well as that happens. But then once you start seeing that behavior, then you can lead into these big parabolic runs like we've seen in the past. So we're still early days. And so again, from the MBI's perspective, it still very much looks like a bear market, which shouldn't really surprise anyone. Currently, I think basically everyone's in agreement that we're in a bear market right now. But as we start looking for signs of a move back into a different part of the market cycle, that's one of the things we can look at. So, should this bullish signal from the TCI play out and that actually be the start of a reversal, you might start to see that play out here. But again, we could see the opposite. We could see the TCI maybe leading to some upside, but maybe not even that. And then us just going back into the bear market move again, something like what we saw here, where we kind of peek our head up and then fall back down again. We'll have to wait and see. From this model's perspective, it's too early to be super excited, but we'll watch it and we'll see what happens. If it starts displaying that more bullish behavior, we'll certainly make note of that, and that's a very useful data point to have. Okay, so the final indicator I wanted to talk about is our risk indicator, the upside downside potential indicator. So if you're not familiar, this is a machine learning based model we have here at the channel that tries to document risk in Bitcoin. So basically 5 here is high risk, -5 is low risk, and I've color coded Bitcoin's price history to UDPI level here. And you'll see it does a good job of documenting these low risk and these high risk points in Bitcoin's history. So I think what's interesting to look at here, so this is the long-term UDPI. This cares about moves that play out over months. So this is a more macro-focused version. We do have medium term and shorter term that are a little bit more short term in their focus. But what's useful to look at this at, or one of the reasons that's useful to look at this indicators, you'll see that oftentimes these points leading before upside tend to get down fairly deep into the negatives. And we can actually see this a little bit more clearly if I just show the raw output of the model across time. And then here's the Bitcoin price overlaid on top. And you'll see that really, when you get down into some of these low risk levels, dipping down below -3, then oftentimes in Bitcoin's past, that has led to some upside. It hasn't necessarily been immediate. Sometimes you have to wait a while. But historically speaking, being at these levels oftentimes is at the kind of the lower levels of bear markets. Not necessarily the bottom, but lower levels of a bear market. And so for us to be able to start putting in some upside from here, that's certainly plausible. Now, of course, there was a point where we're in that level coming off of 2019, where we then had the March 2020 crash leading off of that. Anything can happen. That's the thing, where you can't be too kind of deterministic about these types of indicators, because things can come up that are unexpected that make price act strangely. But that's kind of the outlier. Every other time we've entered this level, it's more or less been at low points in Bitcoin's price within that given market cycle. Now, of course, that doesn't mean that this time has to play out exactly the same, right? We touched this level here, saw some upside, but then we ended up dumping down further. That would be a recent example where touching this level hasn't necessarily led to continued upside. There's also the fact that, we're in very kind of dangerous macro waters right now with inflation and the stock market doing well, etc., that if that were to all go south, even more than it already has, that could throw all this out the window to some degree. But if that doesn't happen, if historical patterns play out in a similar way that they have before, this seems to be a value zone for Bitcoin, and it's a place that would make sense for some upside to follow. Now, again, just because it would make sense doesn't mean it has to happen, but it would certainly be very plausible. And I think anyone who would look back retrospectively would say, oh yeah, of course. Like, look at what the UDPI was saying, look what the TCI was saying, etc. That was a very logical place for upside to follow. So we're going to have to wait and see if that ends up playing out. And again, doesn't mean that you always see upside immediately, but if historical patterns play out again, this would be a reasonable place for us to start setting a stage for a move back to the upside, although, of course, unknown exactly how far that would go. But you do have to keep in mind that there is always room further to the downside. And so one of the counter arguments here is that every other bear market in history has always touched below -4. You'll see that back here. If you call this kind of the first bear market, some would argue that that was too short to be a bear market, but consider that first bear market down below -4. Kind of this double bottom that we put in back in 2015, down below -4. The 2018 bear market, down below -4. We haven't done that again here in this bear market that we're in here. And so if one were expecting historical patterns to play exactly the same, one might say that there's still downside to come. But again, I think all of that is a little bit, questionable, because there's just too little data to really work off of. And I think people kind of get a little bit too into their heads, or get a little bit too focused on patterns playing out exactly the same way that it has in Bitcoin's past. I personally take kind of a more holistic view, and instead of thinking of it, as being this checklist that has to happen before the bottom is in, for example, or before we can even think that a reversal of the upside is plausible, I tend to think of it more in just kind of a continuum, that the lower the UDPI level is, the less and less downside potential the model thinks is continuing to be realistic. But the model does not say that we have to hit -4 for it to be the bottom of the bear market, for example. And Bitcoin doesn't have to do that. It can do anything. And so that's one thing that I've been seeing a lot on crypto Twitter, for example, that's kind of seems silly to me. These people who are going out looking at these indicators and saying that it must play out the exact same time, or just because it did this the last bear market, it has to then mean that we're going into a big bull run. None of that has to happen. But if we're talking about probabilities, and that's the way that I view the market personally, it's about deciding what the relative probability is of different outcomes happening. If historical trends play out, the probability of moves to the upside is greater than probability of moves to the downside, most likely from this model's perspective. And so if we take kind of holistic view across the different indicators we're looking at, TCI is flipped bullish. If continuation from there happens, it could very plausibly lead to some notable upside, like what we just saw, even if it's just what we saw going into March, moving from the low 30Ks up to 48K. And again, we're at the similar UDPI level. It would be very plausible for something like that to play out again. And then for us to be more confident in an actual reversal, we'd like to see things like the MBI start printing that bullish behavior, that oscillation around 0, to start thinking that that is more likely. And then, of course, we'd also like to see the TCI start to kind of continue its bullish bias on Bitcoin. So those are just some things I'm looking at. I think the market is in an interesting place right now. Honestly, no one knows what is going to happen, right? That's the important thing to always keep in mind. There are going to be people who pretend to know exactly what's going to happen. No one knows. But I think by looking at these data, by looking at indicators that can kind of take the human judgment out and just give us a more objective stance, we can start forming hypotheses, forming ideas, shaping what probabilities we think are likely, and then going from there. So none of this is financial advice. You should look at these data and form your own thesis of where Bitcoin is going from here. But certainly, I think that things are shaping up such that it would not shock me in the slightest to see some, at least short-term upside from here. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about indicators and more over there.